Hi there, QuickBooks experts. I hope all is well, and I pray that as you are viewing this video, that you're in the best of health and spirit. In this video, we're going to cover Chapter 3, setting up a new company, establishing a chart of accounts, beginning balances, customers, vendors, and products and services from QuickBooks Online for Accounting 2026. So before we jump right in your email, you are going to receive this email that states, your instructor has invited you to create your own QuickBooks company. So in order for you to work through wild water sports, you are going to need to accept this invitation. And then for the end of chapter case assignments, you are going to receive a separate invitation for a second company. So please keep in mind, you are going to receive two separate emails. One is for wild water sports, which we're going to walk through, and then a separate company that is essentially going to help you complete the end of case chapter assignments. So once you receive this email, the first thing you're going to do is select accept invitation. Once you select the invitation, it is going to take you to QuickBooks. All right, so I already have mine open. So once you accept the invitation, that is going to, cause you to create an account. And then from there, once you put together the account, from there, you ultimately have the opportunity to use, obviously, your email address, your school email, and then from there, you'll have an account. So we're going to jump right in. So upon completion of this chapter, the student will be able to do the following: log into their account, which I already did. And again, you're going to use that invitation that was sent to your email. You'll accept it. You'll also learn how to change company settings, modify the chart of accounts, establish beginning balances, create new customers, vendors, products, and services. You'll learn how to close the opening balance equity and create and print a balance sheet. You'll also learn how to create, print, and export a transaction detail by account report. So we began this process in chapter 2. So in chapter 2, you created an account, provided some basic information about the Wild Water Sports Company, including the company's name, address, industry, type, and so on. Now we're going to revisit the Wild Water Sports Company, and each of the following chapters are essentially going to work the same way. So to begin, we're going to navigate our browser to Wild Water Sports. I already have it open on the right, and the text is going to demonstrate how to do certain tasks. So for every chapter, you're learning something new. Chapter 3, you're establishing a chart of accounts, beginning balances, adding customers, vendors, etc. In chapter 4, you're going to deal with operating activities, recording sales and cash receipts. Chapter 5, you're going to also work on operating activities, purchasing equipment. So there's different things that you are going to learn in each chapter. And then when you get to the case assignment, that is where you are ultimately reinforcing what you've learned in the chapter. So these tasks that you accomplish in Wild Water Sports, in the case, they're permanent. So in the first chapter, when we use Craig's landscaping, none of the changes you made will save. This is absolutely different. Now you are actually working in QuickBooks similar to if you were working on a client's books. The changes that you make are permanent and they're going to be saved even after you close the QuickBooks Online browsers. Though since we're using the online version, you do not need to click save. There's no save file or save file as a command in QuickBooks Online. Everything is automatically saved for you. So after you make the changes to Wild Water Sports in each chapter, it is very important that you verify your work. And how do you do that? At the end of each chapter, there's a trial balance and you compare it to your trial balance, and that lets you know if you are on the right track. So I'll show you what the trial balance looks like. All right, so here we see at the end of every chapter, you will have a trial balance. So it basically lets you know that the total debits and credits balance should be $322,800. And of that total, these account balances need to tie. The checking account should have $25,000, accounts receivable $70,000, inventory $172,000, etc. So in the event that, let's say, your checking account is off or your inventory account is off, one of the key things that you can do is check all dates in the report. So let's say we go to reports, standard reports. Right now, there's obviously going to be nothing. So we get the trial balance. And right now, obviously it shows nothing. But in the event that, let's say, one of the accounts are off, I'll probably, show this in the later examples when I actually add some transactions. But in the event that an account is off, what you can do is double click. Sometimes the wrong date is used. So what can happen is that right now the trial balance is showing you as of January 1st, 2027. Maybe you use 2026 as the year, or 2028 or 2025. So that can be a reason why your trial balance is off. Maybe you debited the account when you needed to credit it. So all of these different things you'll learn as you're going through QuickBooks. The great thing about it is that if you make an error, you do not need to start from scratch. You do not need to start the whole QuickBooks file over. All you simply need to do is find the error and then you make the adjustments from there. All right. So that is your checkpoint at the end of each chapter. So in the event that your trial balance for chapter 3 is not correct, you cannot move forward to chapter 4, etc. So I would strongly, encourage you not to move on to any chapter unless you make sure that your trial balance is correct. All right, because you're just going to be setting yourself up for failure ultimately. So definitely keep that in mind. All right, so here we are. We're going to look at some company settings. So it says your first task is going to be to update the Wild Water Sports company settings. So I've already opened my browser. You can type this in. I've already clicked it. I've already signed in, right? So, and I'm already in Wild Water Sports. So the first thing I'm going to do is click the gear icon. So again, because of the limitation, let me see if I can make it a little, okay, perfect. So now I can see it. So I can click my gear icon here. In the event that you are sharing screen, or splitting the screen much like I am, and you don't see the gear icon, if you click on these three dots, click on settings, and it'll take you to the gear icon. Just so we can see everything, I'll make it a little bigger. All right, so we click on the gear icon, and then from there we click on accounts and settings. And the first screen is the Wild Water Sports Company information as shown in figure 3.2. So this is what we see. And then from there, we're going to change the company's name, tax form, industry, address, and so on. So you can either click on the pencil icon or click edit. So here we see in the company section, type store retailer in the industry box. So we see it's a little different, right? Here it's showing us company type, tax form, and then it's also asking us the industry. But in this case, now the industry information is shown in company info. So we select edit, and then from there, it is going to be all other miscellaneous store retailers. So we start to type it in, store retailers, all other miscellaneous store retailers. So we have that information. We click save. And now it's asking us to edit the company's EIN. So it says click the pencil icon or edit in the company's section, and we input the information. So here we scroll down and we see obviously it's not under the company information, but it's under the legal information. Same thing, however, right? EIN slash Social Security, but we're dealing with a business. So we type in the EIN information. All right, this is just making sure it's me. All right, perfect. So we update this information. The tax type is an EIN, and the EIN is 996854102. We select save. And then it's asking us to view the sales expense, payments, time, and advance tabs, noting the default section. So it just wants us to, just kind of go through it again. Depending on the company, you can set this up how you want. For some companies, instead of net 30, they're thinking it's my money, I want it now. So when I send you the invoice, it's due on receipt, right? There's also some other things you can set up. The preferred delivery method, print now, send later. Do you want to send the invoice right away? Do you want to print it later? So all of these different features that companies can, manually adjust the settings, like tea, right? One thing I love to do is drink tea. There's nothing like a hot cup of tea after a long day, right? Depending on the tea, I'm drinking, I might want milk. I might want honey instead of sugar, right? So same thing. Someone else, they might also like tea, but they like their tea differently. Coffee is a big one, right? Some people like their coffee black. Some people like their coffee with milk, cream, and sugar. So different strokes for different folks. So these accounts and settings, you can adjust them to your liking, right? So the same thing for expenses, time, advance. The company can make these changes however they want. So once we've modified the company settings, it's now time to modify the chart of accounts. So before we move on, there's also something that I want to point out. So Here we see the new version. I'm going to go to the dashboard actually so you can see there's a new version of QuickBooks. So they've made lots of updates to the interface of QuickBooks, but there's also an older version. So this is, if you see this screen as you are going through the Wild Water Sports, you have the new version, but there's also the older version. So it looks a little different, still does the same thing. So I just want to pinpoint that. So if you see this version of QuickBooks, you're looking at the old version, but it's still the same thing ultimately, right? You still have, the only differences is that, in the new version, instead of plus new, it'll show you create, right? The setup looks a little different. You can still get to reports. You can still input expenses, sales. You'll still see bank transactions, all of those things. So it looks a little different. But because they are eventually phasing out the older version of QuickBooks, in the event that you see this version when you sign in, you can click the gear icon and you can choose to try a new version of QuickBooks, and you can simply select switch. So that way, everything you see in the video is ultimately what you would see on your side. All right, so we're going to continue to use Wild Water Sports Company, referred to as WWS, to learn the process of creating, modifying, and deleting accounts and establishing beginning balances. So we're continuing from above. Again, we didn't close it out, so we don't need to log back in. So in such case, creating accounts and related beginning balances, this occurs when you're using QBO for the first time, but the business has been in operation. So to transition to QuickBooks Online from a previous accounting system, we need to factor in, hey, before using QuickBooks Online, how much money did this business have in their checking account? How much money did this business owe to their vendors? Are there any customers that owe money to the business? So all of these beginning balances are ultimately going to be tracked, right? So in this section, we're going to be adding a new checking, inventory, prepaid rent, long-term debt, and common stock accounts in the WWS company. We'll also establish beginning balances for checking, accounts receivable, prepaid rent, inventory, and accounts payable. Every time we add a beginning balance, an equal and opposite amount is recorded in our opening balance equity account. Because again, one thing with accounting, there always needs to be balance. So that opening balance equity account is going to be our plug-in account, and that at the end of the period, we're going to close it out. So QBO is going to let us establish the beginning amount for all these accounts using basic journal entries. For some accounts, like accounts receivable and accounts payable, we're going to use journal entries. And for other accounts, we are going to actually create a new account. So this will apply to our checking, inventory, prepaid rent, long-term debt, and common stock. So when a new account is added, we're going to need to specify the account type. So we have assets, and assets represents anything that the company owns that will provide them with a future economic benefit, future economic value. So I have this bank account with money in it. I can ultimately use the money in the future to purchase things. Accounts receivable, this is essentially where we have provided services or sold a product to a customer on account and they didn't pay us right away. So we're waiting, we're expecting to receive that money. Fixed assets, land, building, equipment, these are all examples of assets. Then we have liabilities. This is essentially where the business owes someone. So let's say, the company purchases goods and services from another business and they don't pay right away. In such case, that would be an accounts payable. Or let's say the company borrows money from the bank. They have a note payable. They borrow money and they're going to pay it back over time with interest. Another way in which a company can incur a liability is if a customer pays them in advance. So let's think about magazine subscriptions, right? If someone decides January 1st, they pay the subscription for the entire year, the magazine publisher, just to make it easier, let's say each publication costs $100, right, for the month. 100 times 12 on January 1st, the business pays $1,200, but they only earn $100 with each month that passes. So it is a liability to the company, the money that was received in advance. So liabilities can be owed to vendors, to financial institutions, as well as to customers. And then we have equity. Equity consists of our common investments, that represents investments by owners. And then we have dividends. This represents payments that are made to owners. All right, because that is ultimately one of the main reasons why individuals they decide, hey, you know what, I'm going to invest money into this corporation because as they have profits, what the corporation typically will do is they will decide to make payments or distribute portions of the profit to the shareholders. Then we also have revenue, which represents the money that the business earns by the selling and providing of services. And then lastly, we have expenses because in order to make money, you need to do what? Spend money. So that's essentially all of the different account types. And the reason why I spend time going through that is because if you set up the account the wrong way, then unfortunately the reports are going to be incorrect. So anytime you set up the account, we're going to see it. Depending on the type of account, revenue and expenses, those are reflected on the income statement. And assets, liabilities, and owner's equity, those are reflected on the balance sheet. And then some accounts will be reflected on the statement of cash flows. So in order to begin, we are going to add a new checking account with a beginning balance of $25,000. So one thing about QuickBooks, there's more than one way to do things, right? So if you go to our dashboard, we can create, let's see, if we want to, we could actually click on accounting. Let's do that. So if we click on accounting, right, there's more than one way to do something as mentioned. So we can click on chart of accounts by going to accounting. We can also type in chart of accounts. And then from there, we can also go to the gear icon as it is instructing us in the book and go to chart of accounts. So just more than one way to do things pretty much. More than one way to do the same thing pretty much. So we go to the chart of accounts, we click on the new account, and then we fill in the text box as it's shown as 3.5. So the name of the account is checking. Our account type is a bank account. And the detail is a checking account. And from there, we input our opening balance of 25,000. And this is going to be as of December 31st, 2026. So we input that information and then we select save. And then now if we see in our chart of accounts, it's now showing us we have a checking account with $25,000. So far we've added $25,000 to the assets of Wild Water Sports and the opening balance equity account. So as we see, we know that debits and credits need to tie. So here we see in our opening balance equity, we have the offset to the checking account with the opening balance equity of $25,000. So now the next step is we're going to add a new product. In QuickBooks Online, products are merchandise a company purchases from vendors, maintains in its inventory, and then sells it to customers. So simply stated, think of it like a corner store or think of it like Walmart. They purchase finished goods and then they resell it to consumers. So that is ultimately what inventory is. Services are efforts made by a company to add value to a customer. In the Wild Water Sports Company, an inventory account exists. If you create a new company, an inventory account may not exist, so you might need to create one. However, when we add a new product, a new inventory account called inventory is automatically going to be created. So we'll scroll down. All right. So here it's asking us to view the chart of accounts, and if we scroll up, we see that there's no inventory account. We have an inventory asset, but we're going to make a new inventory account. So we go to gear. What we're going to do, we can actually create it here. So we'll create inventory. Sorry, inventory, other current assets. So we add inventory, other current assets, and then inventory. So we add this account, we click save. And now we see, for some of you, inventory might already be there. For some of you, it is not. So in the event that you do not see inventory, that is where you can ultimately add it, right? So in such case, I just added the inventory, and then now we're going to go to products and services. All right, so now we see as we go to our products and services, ultimately, for some companies, they might already have a product and service list. So in such case, they're pretty much good to go. In this case, we ultimately are going to add a new product. So we're going to select create item. And we're going to add this item, and it's going to be an inventory item, not a service item. So we type in the name of the product, which is going to be Malibu Sunset LX, an inventory item. And the category is going to be boats. So we add new, and the category name is boats. And then from there, we select save. And for the initial quantity on hand, it is 1 as of 12/31/2026. And then for the inventory asset account, we're not going to use inventory asset. We're going to use inventory. So then we're also going to type the description in sales and purchasing. So what I'm going to do, save myself some time. I am going to copy it, paste the description for sales, and paste the description for purchasing. And we sell it for 60,000. Missing a 0. And we purchase it for 48,000. And then in addition, it lets us know that we're going to select sales as the income account for sales. And then cost of goods sold is going to be the expense account that is already there. And then from there, it's asking us to accept the taxable standard rate from the sales tax section. So what that simply means, if you do not see the sales tax, that means that you did not go through Appendix 2 to set up the sales. So what we're going to do is save this. Well, I'm going to add the preferred vendor, which is Malibu Vendors, and then I'll show you how to walk through that step just in case you skipped it. So Malibu boats. We save it. We'll select save and close for now. So again, if you do not see the taxable standard rate, the reason being is because you did not set up the sales tax. So what we're going to do, sales tax overview, and we're going to get started. And it says, before you turn on sales tax, make sure you have this info, your accurate business address, and the tax agencies with which you file with. So there's more than one thing that you can do. You can go to your accountant settings and make sure that the business address is here. So we scroll down and we see, hey, wait, the address is not here. So what you can do, if you go back to chapter 2 where it shows you this information, all right, and we'll go through this quickly. So it should show us the address. This should actually be in sales tax. So what I'll do, I just check the appendix. Just give me a few minutes. So appendix 1. All right, here it's not asking for the address. All right, so there's somewhere in the text that I know it gives you the address. So I'm going to look perfect. Here we go. All right, so I was at the right space. Just wasn't being patient. All right, so here we are. So this is essentially in chapter 2, how to open the QuickBooks Online company. And now if we scroll down, we'll see the address for the company. So here we see we have the name of the business, tell us more about the company. Right, you go down, down, down. We'll eventually get there. Believe. Here it is. Perfect. So in chapter 2, I want to make sure you know where we are. In chapter 2, how to open the QBO company you created in the preface. Step 24 shows you the address. So in the event that when it's time for you to set up the sales tax, you do not have the customer address, here is where you will find it. Or if you're, following along with the video, then you can basically just input it now. So Colonial Drive, and the reason why I'm doing this is because it's going to make it easier for us when we set up the sales tax. So Colonial Drive, Orlando, Florida. Perfect. It sets this information up for us. So we are good to go. We select save. Our suggestion, perfect. We'll take it. And then we select save and we select done. So this is going to help us now when we go to set up our sales tax. So these are the things that should have been completed. So here you see as you go through step 2. So if sales tax is not completed and you do not see where it says accept standard rate, it is because you did not follow step 29. You did not go to appendix 1 for sales tax. So here we are with sales tax. We select get started. Before you turn on sales tax, make sure you have this information. We do have the business address. We do have the tax agencies we're going to file with. We select next. All right, it's showing they don't have our address. I guess it didn't save. So 5500 East Colonial. It should have automatically saved, but it didn't. So we'll work with it. All right, so here's the address. We select next. The frequency is going to be quarterly. We select next. Have you registered for sales tax with another agency? We're going to select no. We finish and turn on sales tax. So we are good to go. So again, when you add that product or service, if you do not see the sales tax information pop up, that is because you did not follow the steps in chapter 2 to set this up. So just keep that in mind. All right, so we go back to our product and service. And I'm going to jump right back to chapter 3. All right, so here we are. Let's scroll down. All right, so we already added the Malibu Sunset LX, and now we are going to add our first service. So we select new service, and the name of this service is going to be engine service. So we enter that information, the name of the service, and we're going to check I sell this product to my services and customers, and uncheck I purchased this service from a vendor. So this was not selected. In the event that this was selected, we would basically uncheck it. So we type engine service in the description, and then I'm going to copy and paste for sales. And then we sell it at a rate of $250. And then we click save and close. And then now it's asking us to click the gear icon to go back to chart of an account. And again, there's more than one way. You can go the accounting way, you can type it in, or you can use the gear icon. We go to chart of accounts, and we're going to be creating a new account. So we select new account. The name of the account is service/fee income. The account is going to be income. And it's going to be service/fee income. So what do we want it to save? Click new, type service revenue. Okay, so this is going to be service revenue. Account. All right, so the account name is going to be service revenue. We select income from the drop down box, and then the detail type is service/fee income. And then we're going to also input service revenue in the description. So I'll just copy, paste it. And then from there, we can slave it. So next, we're going to return to our recently created item. So we're going to click the gear icon. We'll go right back to products and services. And once we go to product and services, we're going to select edit for the engine service. And we're going to change the income account to service revenue. And then for the sales tax category, it is going to be non-taxable. Services are typically not taxable, so we change it to not taxable. We select save. And remember, before, the sales tax was not set up, so we're going to go back to our Malibu description, and it is the taxable standard rate. So you want to make sure that you don't miss that, because if so, your invoice amounts are going to be incorrect. So now from there, we already saved it. So now we see the Malibu LX has a quantity of 1, and we also added the engine service. So if we click on the gear icon and we go to our chart of accounts, from there, we see that our inventory has a balance of $48,000. So next, we're going to follow the instructions and we're going to add some new products. So we're going to add the Malibu Sportster LX. So I'm going to go back to my products and services, select new. I'm adding an inventory item, and it's the Malibu Sportster LX. This is in the boats category. We're going to copy this because I know we're going to need the description again. So description for sales and description for purchasing. So we have the Malibu Sportster LX. We're selling it for $52,000. And we purchase it, the cost is $41,600. And as of 12/31/2026, we have 3 on hand. So we have 3 on hand as of 12/31/2026. The inventory asset account is going to be inventory. The income account is going to be sales. We're going to choose the taxable standard rate. And then our expense account is already cost of goods sold, and the preferred vendor is going to be Malibu Boats. So from there, we select Save and New. Now it wants us to add a new service. So we're going to add this service, diagnostic service. So you guys are pretty much getting a preview of what is going to happen when you are working in the case assignments. So previously, it showed you step by step what you need to do to create a product and to create a service. And now it's just telling you what to do, and it is expecting you to use the information that you learned prior to complete these steps. So our diagnostic service is going to be a service. All right. We do not purchase this from a vendor, but we sell it to our customers. And we sell it to them at a rate of $500. Our income account is going to be service revenue, and services are non-taxable. So we select Save and Close. So now we're going to check our chart of accounts. And again, they have different checkpoints throughout the chapter to make sure that you are on the right track. So we check our inventory balance. It shows $172,800. Our checking account is $25,000. And if we scroll down, our opening balance equity has a balance of $197,800. So since all of those match, we are good to go. So now to continue, we're going to add opening balances to the prepaid expenses, long-term business loans, and common stock accounts. So to add these opening balances, in the chart of account, we're going to view register for the long-term business loans account. So you can look for it, but if you're at the top, you can type in the information long-term, or it should be a dash. So long-term, they have office equipment, investments, loans. All right, business loans. Here we are. So we select view register. And what we are going to do is add a journal entry. And we're going to input the date as 12/31/2026. 1 is already in the reference number. And we're going to type in Chase Bank. So Chase Bank is going to be our payee. And this is a vendor, so we change it from a customer to a vendor. We select Save. And then for the account, we're going to choose opening balance equity. And then we're going to type $50,000 in the increase section. Press Tab, and then from there, we select Save. So now we see our long-term business loans balance is $50,000, and we are also going to see that the balance of our opening balance equity also increased. So here we see it now shows 147,800. So we're still in the chart of accounts, and we're going to select view register for the prepaid expense account. So if we scroll up, that is an asset. We have our prepaid expenses. We select view register. And then from there, we are going to select add a deposit. The date is going to be 12/31/2026. The name of the payee is going to be Allstate Insurance. This is going to be a vendor, so we make sure that information is there. We select save. Our account is going to be opening balance equity. And then from there, we are going to type $15,000. In the increase section, select tab, and then we select save. So again, as mentioned previously in the example, there are going to be some accounts that we set up using journal entries and deposits, and then some new accounts that we are going to set up by actually adding a new chart of account. So we're going to go back to our chart of accounts. Then we're going to go to our common stock, which is a part of equity. We scroll down, and again, you can also type it up above to find it. But here we are, view register. We are going to add a journal entry for 12/31/2026. The payee is going to be our shareholders. And these are going to be vendors. So we update that information, select save, and then we're going to use the opening balance equity account again. We're going to type $1,000 in the increase, select tab, and then from there we are going to save. So now we just created several new account balances, or we recorded several account balances. So we're going to go to our reports. We'll select standard reports, and we'll type in our trial balance. And as we go to our trial balance, we're going to change the date from January 1st, 2027 for both the beginning and ending dates. So 01/01/2027. And we run the reports, and we see based on that, everything seems to tie up. Our total debits and credits are both 212,800. We're going to make this a little bigger. So both our total debits and credits are 212,800. We see our checking account has a balance of 25,000, inventory a balance of 172,800, long-term business or prepaid expenses rather have a balance of 15,000, long-term business loans of 50,000, common stock of 1,000, and our opening balance equity is 161,100. So this is one of those checkpoints that let you know if you're doing everything correct. So we're good to go on that step. So now what we're going to do is save it. So we'll save customization and select save. So now moving forward, we are going to set up beginning balances for accounts receivable and accounts payable, but this time around we're using journal entries. We're also going to add new customers and vendors at the same time. So journal entries are commonly used to adjust accounts. A customer is obviously an entity, person, a business to whom you sell products or provide a service, and a vendor is an entity from which the business itself purchases products and or services. So to create accounts receivable and accounts payable beginning balance, we are going to go to our dashboard. And in our dashboard, let's make this a little smaller. All right, so we can either go to our dashboard, we can type in journal entry, or we can select plus. And this plus is add new. This is, as I was mentioning, with the difference between the old version of QuickBooks. So this plus, we are going to select journal entry under other. We're going to type in our date. And then we're going to select accounts receivable as the first account. And we're going to type $70,000 in the debit column. And the name of the person that owes us this $70,000 is Refugio. So we set it up. We add the new, and this is a customer. So we leave it as such. We save it. And then next we input accounts payable. And we input 56,000 on the credit side. And we type in Malibu Boats. We already created them as a vendor, so they should pop up. And then we are going to select opening balance equity as our plug account for the 14,000. So our journal entry looks like this. So we select save and close. And oftentimes you'll see save, save and new. And then if you click on this downward facing arrow, we can select save and close. So now the next step is for us to click reports. We'll go to custom reports, and then we click on our trial balance. And then we see here in our trial balance that it shows us the following. Now our total debits and credits is $282,800. And then we see that now there's a balance for accounts receivable of $70,000 and accounts payable of $56,000. And now our opening balance equity balance is $175,800. So this is just going over some of the things we've added. We've added the checking account, we've added accounts receivable, inventory, prepaid expenses. And the opening balance equity, as we know, the balance has increased because of this adjustment. So lastly, we're going to add some fixed assets. So the company had equipment that they partially depreciated. So as of 1/1/27, we're going to set up the fixed asset accounts related to equipment, because the assets are going to continue to be depreciated over their estimated useful life. So we're going to set up an account, a parent account, and then we're going to set up 2 sub accounts. So we're going to go to our gear icon. Again, it's more than one way to do things. So we go to settings, and then from there we go to chart of accounts. And in our chart of accounts, we select, make this a little smaller. We select new account, and then this first account is going to be titled equipment. From there, the account type is going to be fixed assets, and then we're going to select fixed assets, other tools for the detail type. And then we select as of 12/31/2026, and then we save it. Now we're going to create a new account, or we should have did save and new. That's my fault, but it's all right. We're going to type in original cost. This is going to be fixed asset, other tools, equipment. And then we're going to select make this a sub account. So we're going to make this a sub account of equipment. And as of 12/31/2026, the opening balance is 40,000. So from there, we select save and new. Put the date. So the original cost already saved. Now we're saving new. Hopefully that's saved. Then the next account we're going to set up is accumulated depreciation. And the account type is going to be fixed assets, but from the detail type, it is now accumulated depreciation. The parent account is going to be equipment. And then the opening balance as of 12/31/2026 is $10,000. So we select save. So I'm going to double check to make sure that this was completed correctly. All right, perfect. So here we see it. We have the original cost for the equipment of 40,000 and then the accumulated depreciation of 10,000. So we see our net book value for equipment of $30,000. So now the final step for us to establish the beginning balances in QuickBooks Online, we need to close out the opening balance equity account as of January 1st, 2027 for $205,800. So we established a common stock account. The only account left in a corporation's equity account is retained earnings. So for equity, we have common stock, which represents the investments by the shareholders, the owners. We have dividends, which represents profits that are given, or portions rather of the profit that is distributed to shareholders in the form of dividends. And then lastly, we have retained earnings, which tracks the net income and net losses over the period of life for the business. So retained earnings are generated from prior years less dividends. So we'll need to create a trial balance which lists the debit or credit balance in all accounts as of a specific date. So in order for us to close the balance equity, we're going to select plus new or plus create. And then we're going to click on journal entry from the other column. The date is 12/31/2026. And we are going to select opening balance equity as the first account. We're going to debit it for 205,800. And then we're going to select retained earnings as the second account, and you'll see the 205,800 automatically pops up. So one key thing to keep in mind, if the company was a sole proprietorship, we'll use owner's equity, but because we are dealing with a C corporation, that is why we use the retained earnings account. So we scroll down from there, we select save and close. And then next it asks us to go to our reports. And then we go to the balance sheet. And then we're going to go to the balance sheet and we're going to choose as of 1/1/2027. All right. And as we look at it, we want to see, what's going on. So we have the checking account, we have the accounts receivable, and we see that overall we have total assets of 312,800. And then if we scroll down, we have total liabilities and equity of 312,800. So there's different things that you can do. You can decide to print. So if you want to print, you can select the print option and then you can print it to your printer. You could even save it as a PDF. You also have the option to export it. You can export it to an Excel, export it to PDF, or export it as a CSV Excel file. So those are some options that you ultimately have as you are working through. And next is asking us to save the customization button. So this is if we want to save it, or if we want to customize it. So we can select save as a new report and save it. And then next, I already showed you how to do the export. You choose this option. And this is, if you want to do those options, depending, obviously, in the profession, you can export it. So there are times where I need to get more information from clients and I would export it into an Excel so that way they can make edits. If it is a final report, then I would send it to the client using a PDF, right? So you have these different options. So the trial balance, the work we completed in this chapter influenced the company's trial balance. So we are going to now compare our trial balance to see, hey, did we do everything correct? So we can even go to our custom reports that we save, but in this case, I'm just going to input trial balance since I'm already here. It's going to be as of 01/01/2027. Run the report. Sorry about that. So we run the report and then we see, all right, perfect. Well, our total debits and credits tie. But one key thing that you're going to learn is just because your debits and credits tie, it does not mean that everything is correct. So what we do, we see our checking account, 25, accounts receivable, inventory. So you check each account to make sure they tie. I see that everything is good to go. So therefore, we did everything correct. So we created our trial balance and again, we saved it. And then from here, we are pretty much good to go. So here, sometimes you might want to investigate a detailed list of transactions that you've recorded for a specific period. And when you are working on the end of chapter cases, in the event that, let's say, there's a balance that doesn't make sense or something was reported in an incorrect period, we can use a transaction detail by account for a specific period, and this can help us to pinpoint the error so that way it can be fixed. So to create, print, and export a transaction detail by account, we'll go to reports. And then from there, we are going to type transaction. And then we see transaction detail by account. And from there, we're going to type in January 1st, 2020 to December 31st, 2030. And then once we run this report, we essentially see all of the transactions in the different accounts ultimately. So that can help us to determine, hey, this should have been, let's just say we coded it as January 1st, 2027. We can figure out, oh, that's why our balance sheet was incorrect because we used the wrong date, or maybe we used the wrong amount. All right. So all these different things we can ultimately use to, just get a better understanding of what was done correctly, what was done incorrectly. So this leads us to the end of chapter 3. So again, chapter 3, we had the opportunity to modify company settings to add new accounts to the chart of accounts. We added beginning balances where appropriate. We also added customers, vendors, products, and services, and we closed the opening balance equity account. We are ready to move on to the next chapter. And in chapter 4, we're going to add operating activities such as sales receipts, invoices, and cash receipts. So this brings us to the end of chapter 3 from QuickBooks Online for Accounting. So again, as you work through QuickBooks, if you see this new setup, you are good to go. In the event that you still see or see an old version, which looks like this, if this is what you see, all you need to do to use the new version, click the gear icon and select try a new version of QuickBooks, select switch, and then you'll ultimately have the option to see the newer version of QuickBooks.